Imagine a warehouse, right? It's sweltering, it smells absolutely terrible, and sitting right in the middle of this concrete floor are like 1,000 liters of sour, rotting beer.
Oh, wow. Yeah, a total nightmare for any brewer.
Right. The brewery obviously needs to get rid of it, but if they just load that spoiled liquid into, the wrong size delivery barrel to haul it to the dump, the Philippine government is going to treat them like a highly coordinated cartel of bootleggers.
Yeah, they really will. It's no
I'll
joke.
get slapped with massive tax liabilities, huge penalties, severe legal trouble, all over some bad beer. So welcome to this special ICPA Review radio edition of our deep dive.
Glad to be here.
The determined CPA candidate tuning in right now, you know that studying taxation often feels, well, incredibly abstract. It feels like just moving isolated numbers around a balance sheet, right? Or
Yeah.
plugging flat percentages into some formula.
Exactly. It feels very theoretical.
Yeah, but today we are taking those abstract rules and we're dropping them right onto the factory floor.
Because the Philippine tax code is not just theory. I mean, it is a highly physical, aggressively monitored system. When we look at the rules for excise taxes, the Bureau of Internal Revenue, the BIR, they're tracking literal drops of alcohol.
Literal drops.
Yeah, individual storage tanks of petroleum, specific cuts of tobacco leaves. It is very hands-on.
So we're diving into a very specific block of the tax code today, focusing on sections 133 to 140. Basically, the exceptions to excise tax prepayment. The general rule is always, the government wants its money before the product ever leaves the place of production.
Right. You brew a keg of beer, you pay the toll before it even gets on the truck.
Exactly. But today's sources outline these highly specific, tightly regulated scenarios where goods can actually be moved or treated or sold without prepaying that tax. So I guess my first question is, why are we focusing so heavily on these exceptions for the exam?
Well, examiners absolutely love testing exceptions because, let's be honest, that is where the traps live. The general rule is just too easy to test.
Right, everyone knows the general rule.
Exactly. But the exceptions. They are packed with strict conditions, numerical thresholds, even chemical requirements that are specifically designed to catch you off guard in a multiple-choice question.
So if you don't know the exact physical parameters,
You're going to pick the wrong answer. It's that simple. Understanding the underlying logic, like the actual real-world logistics of why the BIR enforces these rules, that's the best way to make this material actually stick in your brain.
okay, let's unpack the first major concept here. Excise taxes primarily target sin products,
Right.
things we consume that have societal costs, like alcohol and tobacco. So the obvious way to avoid a tax on something you drink is to, well, make it undrinkable.
Right. Which brings us to the treatment of tobacco leaf and this whole concept of denatured alcohol.
I want to look at this process of deliberately ruining perfectly good alcohol so it escapes the specific excise tax, because it's fascinating.
It really is. So manufacturers who make cigars and cigarettes, they're allowed to withdraw wines and distilled spirits from government-bonded facilities completely free of the excise tax. But, and this is a big but, provided they are using those spirits to treat their raw tobacco leaves.
Which, just on the surface, seems wild. Like you're curing tobacco by soaking it in rum.
Basically, yeah.
But there's a massive condition attached to this, right?
Yeah.
The manufacturer can't just, take a pristine barrel of wine and drive it back to their cigarette factory.
No, definitely not. The spirits must be suitably denatured. They have to be rendered completely unfit for oral intake before they ever leave that bonded facility.
So they add stuff to it.
Exactly. They introduce chemicals that make it toxic or just incredibly foul-tasting, so nobody would ever want to drink it.
Okay, let me stop you there, because my immediate thought, as a skeptical taxpayer, is that this sounds like a massive loophole.
Oh, I know where you're going with this.
Right. You take domestic alcohol, you poison it just enough to classify it as denatured, and suddenly you've got completely tax-free commercial chemical. That feels like a VIP pass to just dodge the BIR.
Yeah, and it is not a VIP pass. And falling for that assumption, that is one of the most common exam traps candidates face. Examiners will totally try to trick you into thinking denatured alcohol is completely exempt from all business taxes across the board.
So let's lay out the exact requirements so our listeners can lock this into their notes. What actually constitutes denatured alcohol in the eyes of the BIR?
It is highly, highly specific. Domestic alcohol must be not less than 180 degrees proof.
Yeah, 180 proof.
Yes, which translates to 90% absolute alcohol. That is a crucial numerical threshold for your exam, 180 proof. When that specific industrial grade of alcohol is suitably denatured and rendered unfit for oral intake, it successfully escapes the specific excise tax.
Okay, so you take the exit ramp off the highway to skip the massive excise tax toll plaza. But you're telling me there's like another toll booth waiting on the local road?
That is a great way to visualize it, yeah. The law explicitly states that this denatured alcohol shall still be subject to value-added tax.
Ah, VAT. Always there.
Always there. It escapes the excise tax because it's no longer a drinkable sin product, but it is still a manufactured good being sold in the course of trade or business. So the VAT absolutely applies.
Okay, that makes logical sense. The government acknowledges you shouldn't pay a liquor tax on what is essentially a cleaning chemical,
Yeah.
but you still owe a standard sales tax?
Right.
Are there any other hidden toll booths? What if an industrial buyer uses that high-proof denatured alcohol to power an engine?
Then they hit the second trap. If that denatured alcohol is sold to be used for motive power, meaning, it's utilized as fuel for vehicles or industrial machinery, it gets taxed under a completely different section of the code.
Oh, so it shifts categories.
Exactly. It falls under the section covering excise taxes on petroleum and fuels. The product literally trades the alcohol excise tax for the fuel excise tax.
Wow, okay, so the BIR is always going to get their cut. It just depends on the final utility of the liquid.
You got it.
Now, let's take this a step further into what I like to call the Breaking Bad scenario.
Oh, boy.
What happens if a bad actor buys this denatured 180 proof alcohol tax-free, takes it to an illegal underground lab, and uses chemical purification or dilution to basically strip out the poisons and make it drinkable again?
The law actually anticipates this exact form of bootlegging. If alcohol was previously rendered unfit for oral intake, but is subsequently reprocessed and made fit for human consumption again, the original excise tax snaps immediately back into place.
But practically speaking, how does a BIR even enforce that? I mean, the original distiller legally denatured it. They sold it legally.
Right.
The bootlegger purified it in secret. Who actually owes the massive tax bill when the government finally raids the warehouse?
The key phrase to memorize here for your multiple choice questions is person in possession.
Person in possession.
Yes. The tax shall be paid by the person in possession of the reprocessed spirits.
Wait, really? Just whoever happens to be holding it?
Yeah.
What if, like, a local bar bought the purified alcohol from the bootlegger without realizing its illegal origin? Does the BIR care about their intent?
Not at all. The BIR uses strict liability here.
Wow.
Because think about it, tracing black market chemical processing through a whole chain of illegal buyers, that's nearly impossible. If examiners tried to find the original chemist, they would never collect the tax.
That's true.
So the law targets the current holder of the contraband. If you possess the reprocessed alcohol, you owe the excise tax, plus you get hit with all the severe compounding penalties under Title X of the tax code.
Which forces buyers to be incredibly careful about their supply chains.
Exactly.
That is a brutal but effective mechanism. Okay, so altering the chemistry of the alcohol is one way to interact with the exceptions. But what if the chemistry is perfectly legal and you just need to physically move pure, drinkable spirits across town?
That introduces the logistical rules of removal under bond, specifically for a process called rectification.
Rectification, okay.
Yeah, rectification is when a distiller needs to send their raw, unfinished spirits to a separate facility, a rectifier, to basically refine, purify, or blend the product into its final drinkable form.
Obviously, the distiller wants to move those vats of alcohol without prepaying the tax because the product isn't even finished yet.
Right.
But the government isn't going to just let thousands of liters of untaxed liquor roll down the highway on the honor system.
No, absolutely not. They require a joint bond.
A joint bond.
Yes. The distiller removing the raw spirits and the rectifier receiving them must file a joint bond with the commissioner. They are basically mutually guaranteeing that the final excise tax will be paid once the rectification is complete.
Okay, so they're both legally tethered to that truckload of liquor. If it mysteriously disappears in transit, they both take the financial hit.
Correct.
But here is where the rules seem to just, like, defy reality. I was reading through the source materials, and there's a specific provision regarding loss allowances during this rectification process.
Ah, yes, the zero loss allowance trap.
You were telling me that the government taxes evaporation. Alcohol naturally evaporates. It's physically unavoidable. Distillers literally call it the angel's share.
Yeah, the angel's share.
Or maybe a pipe leaks or some spills during a transfer. How can the law legally demand tax on a liquid that vanished into the air?
I know, it sounds totally unreasonable until you look at it through the eyes of a BIR auditor. The law sets a hard line here. In cases where alcohol has already been rectified, either by original continuous distillation or redistillation, zero loss for rectification and handling is allowed.
None.
None. Zero.
But why? That completely ignores the laws of physics.
Because to an auditor, natural evaporation looks exactly the same on a balance sheet as, employee theft or black market siphoning.
Oh, I see.
Right. If the BIR allowed a 5% spillage and evaporation allowance, corrupt rectifiers would immediately siphon off exactly 5% of every single batch. They'd sell it untaxed out the back door and just claim it evaporated.
Wow, okay.
So the BIR assumes that once alcohol reaches that refined, continuous distillation stage, any missing volume is highly suspicious. So the rectifier bears the total burden. If it evaporates, you pay the tax on the vapor. If you spill it, you pay the tax on the puddle.
Pay the tax on the puddle. That forces absolute paranoid inventory control.
It really does.
Which brings us perfectly back to my opening scenario with the sour beer. Examiners love testing specific volume thresholds because numbers make for easy multiple-choice questions.
Oh, they love numbers.
Let's look at the physical logistics of moving fermented liquors, like beer.
Okay, so a brewer can move fermented liquors from their brewery to a bonded warehouse used exclusively for bulk storage without prepaying the tax. But the BIR imposes a minimum volume requirement. You cannot just move a single case of beer tax-free.
Right, what's the minimum?
The minimum removal is 1,000 liters.
Why exactly 1,000 liters?
Because the BIR wants to track industrial wholesale logistics, not retail movements. Tracking thousands of individual bottles moving to different storage units, that would require an army of auditors.
True.
Setting a 1,000-liter minimum ensures the shipments are large, they're consolidated, and they're easily verifiable during an inspection. A special permit must be affixed to the massive package, and the manufacturer pays the tax much later when the beer is finally withdrawn for retail sale.
Okay, got it. But let's go back to that sweltering warehouse I mentioned. What happens when 1,000 liters of beer goes completely sour? It's damaged, it's totally unsellable for its original purpose, and it just needs to be removed.
Well, the brewer can remove it without paying the excise tax because, you shouldn't pay a consumption tax on something no one can consume.
Makes sense.
But the physical conditions for moving damaged goods are incredibly strict to prevent fraud. First, you need a special permit. Second, and most importantly, it must be removed in casks or packages that are distinctly different from the ones ordinarily used for good fermented liquor.
Ah, so you can't just fill up your standard branded kegs with rotten beer and tell the government inspector, hey, trust me, this batch is bad, don't tax it.
Right. You would be inviting an immediate audit if you did that. And the volume requirement changes entirely for damaged goods.
How so?
Each distinct cask of damaged liquor must contain not less than 175 liters, and it must have a permanent note of its contents affixed to the outside.
Again, why that specific number? Why 175 liters for the bad stuff?
It's basically a standard industrial size for waste casks. The BIR requires this volume because it's large enough to be easily inventoried and distinct enough from retail packaging that it deters smuggling. A 175-liter waste drum is very hard to quietly slip into a local bar.
Yeah, they would definitely draw some looks. All right, CPA candidates, you need to lock this into your memory for exam day. When you face a question about moving fermented liquor without prepayment, you need a recall aid. Write down this phrase, 1,000 for the good, 175 for the bad.
That's perfect.
I'll repeat that for everyone. 1,000 for the good, 175 for the bad. 1,000 liters minimum for moving healthy, good liquor to bulk storage. 175 liters minimum for moving sour, damaged liquor in specially marked waste casks.
That mnemonic perfectly maps out the logistics. It organizes the normal operations versus the waste management operations directly into the corresponding numerical thresholds that examiners will ask for.
Awesome. Okay, we've spent a lot of time on liquid courage and the logistics of alcohol. Let's shift our focus to the engines of industry. How do these exceptions apply to petroleum?
Petroleum is obviously a heavily taxed commodity, but the law identifies specific entities that can purchase petroleum products completely exempt from the excise tax. For exam purposes, there are 3 primary groups, but the conditions attached to them are heavily tested.
Okay, let's go through them. Group 1 is international carriers, right?
Yes, international carriers of Philippine or foreign registry, but the exemption strictly applies to fuel used for their consumption outside the Philippines.
Okay.
And the physical requirement here is paramount. The petroleum sold to them must be stored in a bonded storage tank. An international shipping line cannot just get a tax-free fuel card to fill up their local delivery vans.
Right.
The fuel must physically go from a bonded tank into the vessel leaving the country.
Group 2 gets even more complicated, I think. These are entities or agencies covered by tax treaties or international agreements.
Yeah, this is where domestic tax law really intersects with international diplomacy. There is a massive condition attached to this treaty exemption, and it is a favorite concept for examiners. It's called reciprocity.
Reciprocity, basically the geopolitical version of I scratch your back, you scratch mine.
Precisely. The tax-free sale of petroleum to a foreign international carrier or a foreign treaty agency only applies if the home country of that foreign entity also exempts Philippine carriers from similar taxes.
Okay, let me make sure I'm visualizing this correctly. If an airline from, say, country X lands in Manila, they can only buy jet fuel tax-free if country X allows Philippine Airlines to buy jet fuel tax-free when they land at country X's airports.
That is exactly how the mechanism works. If their home country levies a tax on our airlines, the Philippine government will absolutely levy the excise tax on their airlines when they refuel here.
Wow, okay.
The BIR is essentially enforcing foreign policy through fuel taxes. Reciprocity is a very common distractor in multiple choice questions, so always look for that word when you're evaluating treaty exemptions.
That's a great tip. And the third group for petroleum exemptions simply covers entities which are specifically exempt by law from direct and indirect taxes.
Yeah, pretty straightforward.
So that covers the fuel. Let's look at the final piece of the puzzle today, raw tobacco.
Similar to our discussion on alcohol, if products of tobacco are entirely unfit for chewing or smoking, they can be removed tax-free for agricultural or industrial use.
Like what?
Well, for example, nicotine is a highly effective natural pesticide. If tobacco is ruined for human consumption but it's useful for farming, it escapes the tax.
Oh, that makes sense. But the law also allows raw materials to be sold in bulk, tax-free, directly between tobacco manufacturers. And this is where I really want to push back on the terminology, because I know examiners love to swap words here to just confuse candidates. What exactly counts as a raw material that can move tax-free?
The statute provides a highly specific list of acceptable raw materials. It includes fine-cut shorts, scraps, cuttings, clippings, stems, midribs, sweepings of tobacco, and stemmed leaf tobacco.
Wait, hold on. Stemmed leaf tobacco sounds like it specifically includes the stems, like a stemmed wine glass. If stems are listed separately, why call it stemmed leaf?
I know, and that linguistic contradiction is exactly why examiners test it. In the context of tobacco manufacturing, stemmed is a verb indicating an action has been taken. Stemmed leaf tobacco is leaf tobacco, which has had the stem or midrib removed. It sounds counterintuitive, but think of it like pitted olives.
Oh, the pit is gone.
Exactly. Stemmed leaf means the stem is gone, making it a processed raw material ready for bulk transfer to another manufacturer.
Okay, so stemmed leaf is a valid tax-free raw material. But what about broken leaf tobacco? Because I've seen that term pop up in multiple choice options as a trap.
It is the ultimate distractor. The law specifically and explicitly states the term does not include broken leaf tobacco. I will say that again for everyone taking notes. Broken leaf tobacco is completely excluded from this tax-free exemption.
But why the distinction? I mean, if a leaf is broken, isn't it just scrap?
No, because broken leaf tobacco is essentially ready to use. It doesn't need to go through the heavy industrial processing of stemming or cutting.
Oh, I see.
If the BIR allowed broken leaf to move tax-free between warehouses, a corrupt manufacturer could just lightly crumble premium tobacco leaves, call them broken, ship them untaxed, and roll them straight into black market cigars.
Wow.
Yeah. Broken leaf bypasses the necessary manufacturing steps, so the BIR keeps it taxable. Stemmed leaf is an exempt raw material. Broken leaf is a taxable risk.
That is the exact kind of manufacturing logic that separates a passing board score from a failing one. You have to understand the physical reality behind the wording of the statute. We've covered a massive amount of highly technical ground today. It is time for our rapid-fire exam day checklist.
Let's do it.
We're going to give you 4 absolute must-remember takeaways from these exceptions to help you secure those points.
Number 1, the denatured trap. Remember that 180 proof, 90% domestic denatured alcohol escapes the specific excise tax, but it absolutely gets caught by the value-added tax. And if it is used for motive power, it gets hit with the fuel tax.
Got it. Number 2, the rectifier's burden. The government taxes evaporation. If spirits have already been rectified, there is zero loss allowance for handling. If it spills, you pay.
Hmm.
And if anyone illegally reprocesses that denatured alcohol to drink it, the person currently in possession pays the tax and the penalties. Strict liability.
Number 3, the volume rules. Lock in that physical logistics mnemonic for fermented liquors. 1,000 for the good, 175 for the bad. You need a minimum of 1,000 liters to move good beer to a bulk bonded warehouse. You need a minimum of 175 liters stored in distinctly marked waste casks to remove damaged or sour beer.
And finally, number 4, the tobacco distractor. For tax-free bulk transfers between manufacturers, stemmed leaf tobacco means the stem has been removed. But broken leaf tobacco is a massive exam trap. It is not an exempt raw material because it can be easily diverted to the black market.
Perfect. And as you continue your review, consider this final thought. It is so easy to view the tax code as just a punishing list of percentages and due dates.
Oh, definitely.
But when you look at these exceptions, you realize the law is actually acting as an invisible architect of physical reality. It literally dictates the chemical composition of industrial alcohol. It dictates the exact volume and shape of a waste barrel on a factory floor. It even dictates the nuances of international diplomacy and how airlines interact. Once you see the tax code as a blueprint for how physical goods move through the real economy, the rules stop feeling arbitrary and they start making undeniable logical sense.
That is such a brilliant framework to keep in mind. It takes taxation out of the textbook and really grounds it in reality. To all of you CPA candidates listening right now, you are doing the hard work. The exam materials can feel overwhelming, but you are systematically breaking them down. Keep studying the mechanics, keep asking why these logistical rules exist, and you are going to absolutely dominate those multiple choice questions. We believe in your dedication, you have what it takes to pass the board exam, and we will see you on the next deep dive. Keep pushing forward.